Today, we are diving into the stock market's recent performance. We're going to be exploring how it has evolved over the past year and discussing expert predictions for the future. From the remarkable recovery since the lows of 2022 to the current trends and what lies ahead, we will cover everything you need to know to stay informed and make savvy investment decisions. So let's get started on this market update. Let's go.
Welcome to the Financial Mirror. Where future success is reflected in our knowledge of fixing the one thing we can control, ourselves.
Welcome to the Financial Mirror, and thanks for joining me today as we continue to work to improve the one thing we can control, ourselves. Here at the Financial Mirror, it is not about the numbers and spreadsheets alone, but about transforming and educating you on money so that you can make smarter financial decisions. If this is the first time you are joining in, don't forget to hit subscribe on YouTube to be notified of all the new episodes as they release. If you are listening to this on Rumble, don't forget to like and share the video and follow the channel to show your continued support. If you are listening to this on a podcast platform of your choice, don't forget to like and subscribe to the podcast, Apple Podcasts, and Spotify. Leave that 5-star review and a written comment, as both go a long way in getting this information out to more listeners. So over the past 2 weeks, we've talked about the economy. We've talked about where kind of things are at, where they're going. Today, I want to dig into the stock market. It has recently been, putting in some fairly, good numbers. We hit an all-time high just a few weeks back, and this is a interesting time coming out of the very turbulent market that we saw over the past few years. So I kind of wanted to just give you, I do these occasionally, but I really wanted to add this to the calendar to say, you know what, let's do a market update. Let's look back at the market and where things were and what are we at now and kind of what's those key factors that will be influencing the market moving forward so that you know kind of where you need to be looking at, things that you should keep in mind, and then wrapping this up for a few predictions that we have for the future and kind of where we think things are headed. So I do want to start out with really talking about the market and where we were kind of 1 year ago. Around 2022, early 2023, things were definitely in an interesting place. So looking right here at the chart, this is kind of December 2021. We had just kind of come off this really bullish move from the outskirts of COVID. This little part right here is kind of that initial pullback around the initial outbreak of COVID in the U.S. We had a nice run. I mean, listen, this is like .com bubble type of runs. If you made money there, you joined the club. Everyone made money during COVID. Okay, at the end of that first 2 months of COVID, this was pretty drastic. This little time right here, this February, March was pretty drastic. But man, what a recovery we saw. So if you're listening to this on a podcast, a little bit of this is visual. So please go check out the video. Some of this is video, but I mean, charts and stuff, but I'll try to walk through everything the best I can. But like I said, this is a slightly more visual episode just to give people a chance to kind of look at where things are and things they can look out for. You can't look if you're listening to the podcast, right? I'll give you some things to think about. I'll try to walk through this, verbally, but please go watch the video if there's anything that just doesn't really make sense. But you can see right here, this 2020 to 2021 move was insane, right? Everyone was making money. You literally could just pick a stock and you made money. Like it was just a lot of goodness. Now, what happened is in January of 2022, everyone that was making money realized that the stock market is not that easy, right? Like, I'm not saying it's hard. I'm just saying it's not that easy, right? Like, you don't always make money. So we got to see from January 2022 pretty much to September of 2022 a nice little pullback. We got to see that pullback, and there was a consistent concern over inflation. There were rising interest rates. Like we weren't buying homes for 2% anymore. We had some economic slowdown fears. We had some talks of recession, and were we in a recession or were we not in a recession? Like up for debate. But that was just a very, very, very pivotal time. Now, we've come off of that, right? We've come off of that, and you can see right here on the chart, we've had quite the run from down from that initial low of like 3,500 up till now peaking about 5,300. High on this one being 5,341 to be exact. So impressive, right? Pretty remarkable. Had quite the run. So we can see that was a very, very pivotal, crazy moment, right? Like everything was going in the right direction. And we saw the pullback, whether it was due to the inflation or the supply chain disruptions or the geopolitical tensions or energy market fluctuations. All of these things played a role in that pullback, that initial volatility that we saw. And that was really due to all of this, right? We got to see a little bit of some consolidation, and then kind of we've since then trended back into a positive direction. Now, let's fast forward. Looking back at our chart, let's fast forward to we've come out of this consolidation, and this is this move upwards, right? What's caused that? Like if we look at the S&P 500, like I said, approximately, let's just say 5,300. Year to date, 2024, we've seen about 11.2% year to date gain so far, right? Pretty good when we look at that. NASDAQ is up about 12.2%, significant growth across all the major indices, right? Everything is kind of growing. We're kind of in that good spot where you could probably pick a stock and make money. I'm just kidding. Don't go pick a stock and make money. But what I'm saying is that if you look at this chart, you can see like things are looking better when it comes to the market. But what is driving that? Well, one thing that I want to cover and I want to say is and I'm going to show you some things that probably the biggest drivers that we are seeing a robust earnings reports from tech companies, especially kind of in this AI and semiconductor field. Like we are seeing some earnings that are coming out that just show growth in those areas, right? Showing that creates confidence among consumers. When we're seeing these things, we see these growth opportunities, that creates confidence among consumers. Now, the other thing that is kind of showing up is that the broader market is receiving some contribution from those specific areas, right? Like you can think of like healthcare, for instance. Healthcare is getting, tons of traction due to these technology booms, right? This AI boom, this all these things like that is influencing other sectors, right? Like those things are contributing. Like new AI technologies are going into the automobile industry, to healthcare, to all these things, right? It's just growing. So that is giving this market some lift, right? It's giving it some lift. This is what this is really kind of this driving factors. We're getting more and more growth from all these different areas, right? So what can kind of keeping this in mind, because this is, the good part and the bad part about a stock chart in general is that if we looked at this, right, like let's zoom this in. Like the thing about a stock chart is that it's only as good as its most current data. And its most current data will tell a story. If you open this up and you saw this, you would be like, oh my goodness, like the market is just pulling back. Like this is weak, right? But then every single, what are these, weeklies, monthlies? Every single month, you're like, whoa, look at this. And then you get this little consolidation right here. And then all of a sudden, oh my goodness. And then you see this and you're like, man, that thing is picking up some steam. You think it's getting a little weaker and then boom, life goes on, right? it's only as good as its most current data. So let's start to think about kind of this driving factor, this last bullish move from, let's just call it break out of the consolidation around March 2023 till now. So let's say just over a year. What has led to that? And what can you be on the lookout so that you can start to think through, how can I maybe not predict, but how can I start to say, is this going to look like this, right? Like, are we going to start getting more and more of these candles? Just making these, just filling these in with my my green right here, right? Are we going to get more of these? That is not a good green color. Are we going to get more of these? Or are we going to go the other way, right? Like I want to help you today kind of walk through, how can you start to really start to think about what's to the right of this candle, this most current month being May. What's to the right of this candle, and what can you be on the lookout for? It's going to help be some key factors in influencing what candles are developing, okay? That's what I want to talk about now, right? Is how do we start to predict what's going to be to the right of that based on certain factors, right? So the first one I wanted to dive into is to really think through the Federal Reserve and inflation. I believe that this is going to be one of the primary drivers of market sentiment, and it has been, and it will continue to be. They meaning consumers. Consumers are going to continually be very, very, very keened in, like honed in on what is the Federal Reserve doing and what actions are being taken on interest rates, right? We do see inflation starting to show signs of kind of moderating. The Fed's indicated the possibility of rate cuts later this year, and that's kind of bolstered some market confidence. However, the central bank's decisions are closely watched because they do impact borrowing costs, consumer spending, and just kind of overall economic activity, okay? So when we think about that, people are going to be watching this. So where I would be looking is for, in these next few months and kind of moving in throughout this year, inflation trends are going to be critical. I would be looking to see that inflation is continuing to decline, right? Like continuing to get closer to that target 2%. When we really look at it, we can see that we are now headed kind of in a good direction. But this is the CPI, the Consumer Price Index. And back around this time, let's start around this March 2023, where the chart really started to take off, right? Like really started to go into this bullish move. CPI was up around 5%. Well, since then, you can see 4%, threes, kind of got down here in the threes, and we hadn't really jumped up over 4 cents. We're kind of in this sideways movement around 3%, currently sitting at 3.4 as of most current data in April 2024, 3.4%. This is the first area that I would truthfully be watching, because of the fact that this is going to be a key driver of how confident people are in the future of the market. When we think about those new candles to the right, that is going to be a key factor in what's going to help drive those in that direction, right? Into just showing 2 more green candles and not 2 more red candles, right? But that's the first thing that I would really be looking at, is I would be looking at inflation. The next thing, if you really want to nerd out on this stuff, right? And this is if you really want to nerd out on this stuff, I would be looking at earnings. I would be looking at the earnings that people are producing, right? I would be looking at that. And you can see kind of earnings are continuing to show a pretty good rate of good earnings. Earnings so far this year have been pretty strong. For 24, there's been a huge prediction around solid earnings growth rate of about 10 to 11%. But I think the biggest part is that so far, about 80% of S&P 500 companies have actually exceeded their earnings expectations in the first quarter of 2024. That's a big deal. You don't see that a whole lot, but that's a big deal. And kind of Earnings Whispers is one site you can go to and look at earnings. But I mean, you can just scroll the page and see beat expectations in line with estimates, which doesn't mean you beat it, but you didn't miss it. You got a couple missed, and then you got some beats and some missed and some beat and beat consensus, beat expectations, beat expectations, beat expectations, right? Like just tons of people beating expectations when we look at earnings, which is a huge thing. That means companies are actually earning money, like they're earning money, which is going to, once again, create confidence in the market and bring more consumers into the market and wanting to invest. Having that confidence creates confidence in the market creates a confident investor, right? Someone that's willing to take part in the market. When COVID hit, there was the big dip in the market led a lot of people to take in their extra money and put it in the market because it was a clear flashing buy here. This is a value. You are getting this at a discount, right? Like everything was discounted. Then all of a sudden it shot up. People made money, and that's kind of where this whole thing kind of came from now. But when we look at this and you see tons of companies beating expectations, that shows there may be some stocks out there that are actually discounts at this point. That companies are making money and their stocks may be discounted. I'm not here to sit here and give you strong investment advice. This is all about understanding where the market is and where the market is potentially going. But all in all, this level of earnings has just been miraculous in terms of how people have beat it. Specifically, and it kind of flows me into my third point, is technology with the AI boom and all that. Technology is truly being a driver of this market. When we think of expectations and we think of earnings and technology, I mean, let's just look at kind of the big seven right here, the magnificent seven stocks. Apple beat expectations on May the 2nd, right? For their most recent earnings. Microsoft, let's see, that didn't show up. Well, we'll come back to that. But let's go right here. Is this one opening up? Nope. There we go. Apple beat. Microsoft beat expectations on April the 25th. Google, right? Google beat expectations on April the 25th. Meta beat expectations on April the 24th. Man, I mean, just every single technology company, all these big seven, May 22nd, NVIDIA beat expectations. Amazon beat expectations. All seven of the big seven, the Apples, the Microsofts, the Googles, the Metas, the Teslas, the NVIDIAs, the Amazons, all of them are beating expectations. That's a big deal. That's a big deal. These companies are playing a crucial role in this rally with the AI, with the building of this continuing growth in technology. They have been a huge driver of the market and where it is. AI's impact extends beyond, as I stated, technology companies. It is in sectors like healthcare and finance and manufacturing. Everyone is starting to harness AI for efficiency and productivity gains, and this adoption will suggest a sustained demand for AI-related technologies and services. And this is where we can start to see a long-term market growth when people start to embrace and take AI into their organizations to create that efficiency, create that productivity, right? So kind of those big three areas that I would be focusing on looking at. I'm looking at the inflation, and I'm looking at it very, very, very much with a hawk eye. I'm looking at this earnings growth. Are these big companies still beating earnings? Are they continuing to beat expectations? Something I'm looking at. And then I'm keening in on technology and this AI boom. I'm watching those stocks and I'm seeing where are they at? Are they still beating expectations? Like, for instance, NVIDIA has been a really big driver around this. They just beat expectations. Next earning window up around, you'll start to see more earnings coming out in that August time frame. You'll start to see a lot of the earnings, the Apples, the NVIDIAs, the Microsofts, is in July is Microsoft. But you'll start to see some of those starting to grow. And report their next earnings. If you start to see July, August, more of this technology, AI, continuing to beat expectations and grow, may have a few more green bars in our future to the right of that current candle. So we'll see. But looking ahead, where are we going? The biggest thing that I would tell you is this: is the market outlook for the rest of 2024 remains, cautiously optimistic. Morgan Stanley, Fidelity, they suggest the market might not see another year of double-digit gains, but it is likely to continue an upward trajectory. That's what they are stating, and they is Morgan Stanley and Fidelity. They think that it'll be more at a measured pace. What I would tell you is where it's at right now. Is in an interesting spot. Let's just say that it's in an interesting spot for the fact that it has had quite the run. So let me throw this up. This has had quite the run, and so right now, what I tell you is that this if I would be watching that 5,300 mark. That is the kind of that new high, and that would be, when I think of predictions, that would be that area that I believe is going to kind of cause a little bit of a fit. We could see some more consolidation kind of happening around this 2,300 mark. Who knows? But the biggest thing that I would be looking for is this 5,300 mark to either A, roll over and go the other direction, or B, break out and start to put in some new higher highs like this, like pushing out to the 5,500. If this thing continues to consolidate, it could lose some steam and roll over, kind of pulling back to that 4,800 area, maybe even just to the 5,000 area, something like that. But probably the 4,800 area if it rolls over. But that's really what I'm looking for. I'm looking for that 5,300 level to either get broken and head to the upside. Very much, like I said, I'm in agreement with Fidelity and Morgan Stanley. This could be at a very, a much more methodical and measured pace. But I would say if that breaks out, that could be, a very, very slow growth and move throughout this year. And I would once again remain cautiously optimistic. The big thing that I would be looking at, though, key risk here, is that inflation control and continuing to look at the confidence in earnings. Two big areas that I'm looking at is that inflation and confidence in earnings. So continue to watch that. If the Fed if they do start to cut rates, that would also be a sign that we could start to see some bullish momentum pick up. But those are just a couple things that I would be on the lookout for. The last thing that I wanted to talk about is really providing some insight, because this is an election year, kind of just talking through how has the country fared with election years in the past. So I pulled this up, and this is the S&P 500 index for previous presidents. And you can see when a Republican was elected, the average return was about 15.3%. All this data is only up until 2016. But this was from Morgan Stanley. And when a Republican was elected, 15.3%. When a Democrat was elected, 7.6%. All election years, double digit returns when you average them all out. Okay, so pretty good. 83% years have returned positive returns during election years. This is an election year. It is. It's an election year, and what I'm here to tell you is that could play a role into some of the confidence in the markets, right? You'll see on here a couple of them, like 2008 global financial crisis, housing bubble, collapse of Lehman Brothers, but all these things, recession, all those things. That was a big time, and that was played a lot into 2008. 2000 was a dot-com bubble bust and all those things. There was just some hiccups in 2000. Every single negative year, there was an outstanding factor that led to that decrease. What's another one? 1940, we had World War II, kind of the ongoing conflict in Europe. It was there was an increase in U.S. getting involved. Definitely created some concern. U.S. economy still kind of recovering from the Great Depression. All those things all played a role. 32 was the Great Depression. You were literally in the midst of it. All those pieces, and that all plays a role in this upcoming year, because this is a year of elections, and this is a year that some of this will play out. So what I would tell you is be cautiously optimistic. The market is in a good spot right now. I'm not saying that, if this 5,300 level, if it holds strong, if this could roll over and go back to the downside, but I'm still cautiously optimistic that we could continue to grow in the market over this year, 2024. And if anything with that changes, I'll create another episode and I'll kind of give an update on where my prediction stands. Biggest thing for you is to continue to stay informed with things that are going on. Be in tune. I'm not saying you have to keep up with politics, but what I am saying is that you do need to keep up with, stay up to date on those big company earning reports. They are drivers of markets. If you're even slightly interested in the market, that's a good thing to keep up with. Keeping up with inflation data is a direct driver of consumer confidence. So just something else to keep up with. Also stay up to date on managing your investments, diversifying your portfolio, all those, buzzwords that we hear about, but all so key. And the other big thing that I would challenge everyone is continue to dollar cost average, continue to invest, no matter if the market's booming or the market's sagging, continue to invest, continue to dollar cost average and make more money in this market. So hope you got something out of this. We're kind of approaching that halfway market 2024. Stock market will continue to offer opportunities and challenges, but stay informed on those key factors that I talked about that are driving kind of those market movements, and you will be able to navigate this dynamic landscape of the stock market effectively. I know for a fact you will. Like I said, it is an election year. We could see some turbulence with that, but all in all, great history of 83% of positive performance on election years. So great news when we talk statistics. Thanks for tuning in, and I hope that you truly got something out of this episode. It's really meant a lot. I love doing these type of episodes. It's just a lot of fun to me. If there is anything that you need help with your personal finances, just head over to thefinancialmirror.org and hit book now in the middle of the screen and schedule a free consultation today. We'll meet up. We will talk through exactly what it is you're looking for and see if a financial coach is right for you. If it is, we'll get you a package that works best for achieving your financial goals, and we will get you on your merry way. If you want to give an extra dose of support to the stream, head over to thefinancialmirror.org/shop and pick you up some awesome financial mirror gear. I truly appreciate everyone tuning in. Don't forget to subscribe to the channel, like the video, share it with at least 5 friends and family members, and leave a written comment just telling everyone how much you enjoyed the episode. It all goes a long way. Till next week, continue improving the one thing you can control, yourself. Peace.
Well, that wraps up today's Financial Mirror. Join us next week as we continue to work on ourselves, change our mentality, and to commit to achieving the success we always envisioned. Regardless of your platform, Help us grow as a community. Please like, subscribe, and share with the people in your lives.